Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. This is Aaron Edwards, Santos Springs. This video will be sent to you on Tuesday, the 10th, February 10th. I'm actually recording it on Sunday, so we won't have the Monday trade like we usually do. So we won't get Monday's market. I'm recording it on Sunday because I'm going to be at the Top Producer Conference. Look forward to meeting up with some of you there. And you should have received yesterday, Monday, if you're watching this live, you should have received recommendations because there's a lot of moving parts. We had a big pop in the soybean market last week, and then we have a USDA report Tuesday, and there might be some adjustments to be made. So the recommendations are going to be sent out on Monday, actually a day earlier than they usually are, because there's some moving parts, and depending on what the market does around this report, there may be some work to get done. If there's a need for kind of an audible or an additional recommendation or a tweak or to just point something out, I will be emailing you maybe Tuesday after the report, maybe Wednesday. If we need to take action or adjust, I'll send out further recommendations on that. So let's jump into it. I'm going to go ahead and share the screen here, and we will go one step at a time. All right, let me grab the marker and highlight this. All right, let's get the highlighter over here, and let's go with green. All right, so the first thing, if you've been following the instructions, you should have 440 to 450 March calls if you had some corn positions from last year. I mean, it's very likely that you have some corn calls if you've been following the recommendation. Now, those calls are, after the January report, those calls definitely took it in the chin. They've recovered a little bit. The recommendation in here is if we get some volatility, because there's just not much time left on those March calls, right? If we get some volatility around this report, if we get a pop and you can get out of those, basically getting your money back or a little bit of profit or, close to a break even, again, the recommendation was to get them at 10 to 15 cents. So I'm sure different ones of you have different strikes and different buy-ins, but if you can keep your money together on those or keep most of it, if you can get out of those for roughly what you got in them, a little bit of profit, maybe a little bit of loss on some volatility on this report, I think it's a good move, right? That's the recommendation. Try to keep that together. Now, I'm not going to suggest rolling those to the May just yet
because, and I'll go over the analysis a little bit later. So I won't explain the thought process right now, just go over the recommendation. The other thing is roll the March basis contract to May at 8 cents or better. So basically, some places charge you an additional, if you look at the spread, it's been hovering around 8 cents. So if you can roll it at 8 cents or better, so -7, -6, right? Better than 8 cents. If you can roll it at or better than 8 cents, go for it. The caveat to that is if your co-op or elevator, whoever does this roll for you, if they charge, a penny to roll it or 2 cents or 3 cents, you might need to include that. So 8 cents plus, hey, we charge a nickel to roll it. So maybe that would be at 13 cents, right? But the idea is if we can get a good roll, we want to keep our eyes on that. And anything with that spread, and I'll show it in a little bit, with that spread, 8 cents or better, anything in that category for how far along we are into February and close to the expiration of that contract, we want to roll those. The other thing, it's just get caught up on soybean sales. Basically, recommendations have been made to sell all of your Q4 and Q1 soybeans back on the November rally. If you didn't get that done, if you still have some soybeans, got a little pop last week, maybe it goes up a little bit more, maybe it goes down, but playing catch up on those soybean sales. The caveat to that is new crop sales. I have recommended whatever the new crop volume is to be forward price, getting 50%. And I do believe on new crop, it doesn't need to be as urgent, but if you have old crop that you're not going to store till the spring, if you're going to store it till the spring, that's a different thing. But Q4 or Q1 soybeans that you've kind of been lingering and dragging your feet to sell, this pop is an opportunity to get those moved. So we've been through the recommendations. Now let's go through the analysis. We're going to start with soybeans. We're going to start with the net position of the funds. Grab a blue marker here, that'll work nicely. One thing that's interesting to me, the good news is the speculators are still long. I mean, that for me, I'm not going to understate how good of news that is, in my opinion. Brazil is harvesting the largest soybean crop that the world has ever produced, and speculators are bullish, even if it's just a little bit, right? Speculators are saying, hey, maybe this price of beans is cheap. That is really good news for me. That South American crop, I don't know that it could get much bigger on paper than what it is or what expectations are. We'll see. Maybe we get a surprise from the USDA or from CONAB or something. But on paper, that is a massive crop. So if anything, I actually could see it coming down a little bit. But regardless, it kind of seems like speculators have shrugged that off and they're looking at headlines. They're looking at U.S. ending stocks and they're saying, hey, these beans could really go, right? And coming into the battle for acres, that's important. It's also important to point out they are not back up to these huge overbought positions that they were. So a lot of people are like, hey, I miss beans. Should I sell it now? Should I sell more? A lot of sell alerts going out or whatever. But should you sell? This is my thought, right? We sold aggressively in this bubble when spec funds were really strong. Now, in hindsight, we didn't have that information in real time. But in hindsight, we did a good work on the soybeans, right? So are we excited to sell with speculators down here? Not too much, no, because if we can get any type of bullishness, hopefully the next round of sales will be bringing our sales averages up, right? New crop 11.15, 11.20, 11.10. Hopefully the next round of sales will be 11.30, 40, 50, right? Maybe $12, who knows? Hopefully our next round of sales increases our sales price. And if we get speculators buying soybeans, they certainly could. I don't feel like that's blind bullishness. That's just looking at the situation. And if we put some numbers to that or just draw some lines around here just to point it out, let's get some black up here. The good news is it's really looking like we're going to have this 20-day mover come up. It's just math, right? We've had a high enough trade for long enough. that it sure looks like that's going to cross. If in fact that happens, and let's just say that this 200 bar, let's just say this becomes the new floor and it's solid coming into the spring, we will look at the highs from most of 2025 until that fall rally. We were hard pressed to get $11 on, say, May futures. Now we're talking about that becoming our floor. That is good news. That is really good news coming into the battle for acres, coming into the spring season. So there is reason for optimism on soybeans. And I know a lot of you are saying, that's not optimism. I mean, that's barely a break even, right? Okay, but break evens were tough to come by in 2025. And if we can get break evens, that's already better than last year. So why catch up here? Why are we playing catch up here? Well, the recommendations were, to sell in here. Most of your average sales prices, depending on what you had to get done, is probably right around in here. We catch most of your average sale prices on the board of trade price. Now we're looking at, if you missed that, we're almost all the way back up there. We're at the second best price of the year, so to speak. So play a little catch up. Now for spring bushels, no, we're going to leave those tucked away. Hopefully those are going to be our best sold bushels of the year. We're going to tuck those away. For new crop, it's a little trickier. Maybe some of you should play catch up, but if you've sold new crop, I still think we have a chance at, I think we'll have other chances at similar prices. So we have the battle for acres coming up in March. It'll be interesting to see how that pans out. Shifting gears now to corn. If we look at the position of the funds, they're still sold. They still have a large oversold position down in here. It hasn't gotten big enough to justify buying it just from a speculative standpoint, and they did slightly step back on that. So hopefully we get something that allows speculators to say, I actually want to be long corn. And if that happens, we could see corn pick up quite a bit of what it lost pretty quick. And I'm not talking anything out of the world, anything incredible, but picking up 20, 30 cents would not be too hard in my opinion, maybe even 50 or 60 cents, which would be really nice. And I think if that happens, we'll likely get some work done. But getting a little recovery, if these speculators are willing to take a stab at a long position, and hopefully a pretty big long position, but we need to get those speculators moving up. If soybeans rally, it kind of lifts the cap and corn has a shot. Let's just look at the corn chart though. If we look at the May, showing the May because eventually, on the basis contracts, for example, we're rolling, not in a huge hurry, but we're trying to get rolled to that May. And here's the thought process. We finally got into, let's grab the marker here. All right. We're finally up over this 20-day mover. So that the expectations, if we stay up, that would rally. And to the extent that that happens, we would see that corn market climbing up. If we get a friendly report, that could be higher, faster. If we get a bearish report, what I'm going to be looking for, the nightmare would be a bearish report like January, where we just absolutely take it in the chin and then come back down to harvest lows, which could happen. I mean, we don't have a crystal ball. That said, if we get a bearish report and the only thing that happens is it comes back down to the 20-day mover, that's not that bad. What's really important, in my opinion, is to just keep an uptrend. If this corn can stay in an uptrend, the markets will take care of themselves. We'll get more and more buyers. We'll get speculators rolling out. If we can get soybeans trading, they don't have to go straight up, but staying, say, above $11 on the nearby. Soybeans can stay above $11 on the nearby, get corn into an uptrend. That scenario coming into March, coming into the battle for acres, is optimistic in my opinion. And we're at a little bit of a news vacuum unless we get tweets like we got, or posts on social media like we did last week, we don't have weather stories very much affecting supply. So demand is usually somewhat of a boring story. It's been a friendly story. If we can get past Tuesday's report, this video is coming out on Tuesday, so past the February USDA report, if we can get past that, we will have a bit of a news vacuum until we come into the battle for acres. And if we can get in that news vacuum that's expected, the back half of February, into March, if we can get to that period with soybeans trending up, corn trending up, and them competing against each other on the upside, trying to buy acres for each other, we do have a chance at a little bit of wind in our sails, in my opinion. So the title of this video is Buying Time, because we just need to get to the next opportunity and hopefully take advantage of it, manage it well, do the right thing at that. In a nutshell, that's that. The last chart that I want to show is of the spread, just because I mentioned it. This is the March-May corn spread. Let me grab the marker. So if you just look here at 8 cents, so that's March minus May is negative, which means May is trading slightly above March. If you're gonna roll it, they're gonna charge you basically that difference. And in some cases, they'll throw a fee on top of that. But and all I'm saying is at that 8 cents, anything better than that at this point in time, I believe we should take just to roll to the March. The reason the recommendation came out, okay, this thing could come down here. Oh my goodness, Aaron, why don't we roll? Okay, that could happen. But if it goes the other way, we still have a little bit of time. You know, the March contract isn't coming off just yet. If this thing were to go up and all of a sudden that spread is 6 under, I want you all to recognize that that is an opportunity and say, okay, I've got March basis contracts. This spread went up and it's just 6. This is something I want to be acting on. So, and that could happen depending on how we trade on Monday, on Tuesday, on Wednesday. That could happen this week, and I want that on your radar. So that's that. And then let's go to summarizing kind of a breakdown, and then I got a few questions to cover, and we will wrap it up. So we've talked about exiting the March corn calls. We have talked about rolling March basis contract to May at 8 cents or better. And we're talking about getting caught up on soybean sales. Now let's go seasonal. For corn, it is neither a buy nor a sell. For soybeans, neither a buy nor a sell. Managed money, they are net short on corn, but not big enough to be a buy for us to look at buying. They are net long in soybeans, but not big enough for us to look at selling. Soybeans are in corn is in an uptrend, and soybeans are in an uptrend. If we can keep those uptrends, that is very important, in my opinion, over the next couple of weeks. If we could just keep these markets staying above, that 20-day mover, staying in an uptrend, trading most days in an uptrend, that gives us a little bit of wind in our sails coming in to the battle for acres. So let's hope that continues. Well, I was going to mention it in the other chart, but we'll just talk about it here. Basis levels have been climbing steadily pretty much across the board. In the Eastern Corn Belt, they are trending above historic basis levels, and in the Western Corn Belt, they are trending below historic basis levels. But we finally have basis improving pretty much across the Corn Belt. Again, as basis improves, we want to buy time. Soybeans have had a nice pop last week and may very well face a downside correction. Corn managed to get into an uptrend. And if it can hold its uptrend, we are well on our way to erasing the damages done by the January report. And then the two questions we had, one was, will I let you know when it's time to price the futures on the basis contract? And the short answer is yes. The caveat to that is, as if you're watching this video, there is a recommendation to move the March to the May so that we have more time. A lot of you have the deadline coming up at the end of this month or towards the end of this month, a deadline on that March to price the futures. So instead of pricing the futures, our goal is to roll that to the May at a friendly roll, even though there will be a cost to it, but at one of the better opportunities. So we want to roll March to May just to buy time again. But yes, I will let you know when the market is giving us opportunities. The other question was, should we look at forward pricing corn? And I have not made recommendations on forward pricing corn at this time. So new crop corn is not priced. Soybeans on that November rally, the volume that is in your portfolio to forward price should be 50% done on soybeans. They're at pretty close to the highs of where we've traded. So yeah, on soybeans, we've gotten quite a bit of work done. Corn, we've not yet priced new crop corn. Hopefully we have a friendly report. We could sure use a round of good news. Hopefully that kicks us off to a rally. Love to see $12 beans and corn. Hopefully it's a fun day. But we've all lived through enough USDA reports to know to not set our hopes too high. Have a great rest of your day, great rest of your week.